Hello and welcome to the February 10th, 2010 video version of InvestEd Central's Chart of the Day. I'm Tom Boley, InvestEd Central's Chief Market Strategist, and it's my pleasure to provide you with today's Chart of the Day. This Chart of the Day is brought to you by StockCharts.com, simply the web's best financial charts. Today we're featuring Silicon Graphics International Corp, ticker symbol SGI. This is a $277 million technology company that focuses on helping customers solve their technology challenges by delivering clustered and high-performance computing and storage solutions and software and services. Looking at the chart here, you might say, hey, this is a pretty bullish-looking chart. The moves to the upside have been pretty swift. They've been accompanied by very heavy volume, so we've got great volume trends in place. What could be wrong with this picture? Well, in the long term, there might not be too much wrong with this picture, but in the short term, I think SGI might have some technical difficulties in trying to continue to move higher. This gap up right here on February the 3rd came after SGI released its earnings on February the 2nd. You can see this was one of the heaviest, actually it looks like the heaviest volume during the 6-month period that we're showing. But notice that the gap up and then the ensuing rally during the day actually cleared intraday. We got up to about 950 or just above, and that had cleared the prior high close. So we were in breakout territory after earnings, but then we came back down and failed to confirm that breakout on the close. The next couple of days we consolidated, we pulled back on lesser volume, and then on about half of the volume that we saw with earnings, we saw SGI make the breakout, and that was on Monday. Now Tuesday, we saw a reversing candle. We had a gap up, we had just as much volume, but now we came back down and printed what's referred to as a dark cloud cover candle, and this is a reversing type candle off of an uptrend. So it, at least in the short term, suggests that SGI could have some difficulties. Now what makes it even more, or what could make it more difficult for SGI to go higher here, is that you can see the MACD is much lower as it made this attempt at a breakout, or actually as it broke out and then put in this reversing candle. It came at a time when the MACD is much lower. So this tells us that the buying momentum that SGI has enjoyed for the last several months, certainly the last 8 to 10 weeks, seems to be coming to an end here as we put in this new high with a lower MACD. So in the short term, we believe that SGI could pull back. You can see recently during this uptrend, the 20-day has for the most part held the stock. We did move down below it a couple of days, but then bounced right back up. I think this time we could see a little bit more weakness, maybe down to that 50-day. And if you look closely, you'll see that this breakout back at the beginning of January actually occurred, taking out the prior high around 750 to 760. And notice we have not yet gone back down to that level to test or to retest this breakout area. So there are a number of signs suggesting that in the near term SGI could have some difficulties, but as always, you want to keep your stops in place. So if you see SGI close above, say, 980, 985, or on an intraday basis take out Tuesday's high, which was up at $10.10, that's where we'd want to be cautious and maybe consider just taking a loss if you decide to short this one and it does make that breakout. I hope you've enjoyed our presentation today. Be sure to check out our chart of the day every day at InvestEdCentral.com. While you're there, sign up for our free weekly Market Pulse newsletter and have the chart of the day emailed directly to you. Happy trading.